Kia ora and welcome to Shared Lunch, brought to you by Sharesies with BusinessDesk. Sharesies is a wealth development platform whose purpose is to create financial empowerment for everyone. My name is Dan Brunskill. I'm the markets reporter at BusinessDesk. Also, it's important to remember investing involves risk. You might lose the money you start with. Shared Lunch is not financial advice. We recommend talking to a licensed financial advisor. You should also review relevant product disclosure documents before deciding to invest. Today, we're joined by Blair Turnbull, who is the CEO of Tower Insurance.
Miranda, welcome. Thank you.
We are recording this as the cyclone bears down on us. Where are you and how dry are you?
I'm at the office, just with a handful of us. We're pretty much completely work from home across all of our offices. But it's nice to be here. It's relatively speaking dry, so hopefully it'll stay that way.
Yeah, likewise. I'm at my house in Parnell, hoping that it's like a 100-year-old villa, so I'm hoping that it's still standing this time tomorrow, but we'll see how we go. You have been CEO of Tower since 2020, and the last few years have been a little bit crazy. Can you tell us a little bit about how you came to the role and how these 3 years have been?
Sure. So for my sins or otherwise, I've had 25 odd years in insurance across 4 continents around the world. So I didn't plan it to be that way, but I sort of did fall into the industry and I feel very passionate about the industry. I returned from the UK about 2.5 years ago to take on the role as CEO for Tower. And Tower's always been a brand that, going to university, I've always looked across and admired. So the opportunity to bring home all of that experience from overseas, to join the team here was pretty exciting. And so once we'd made the decision to come home, it was a very, very easy one to join the Tower team.
And you've always worked in insurance, but you said you didn't imagine doing that. What did you imagine doing and how did it go wrong?
Cheers, Dad. Certainly, I appreciate insurance isn't everyone's cup of tea, but I certainly enjoy it. Coming out of Otago Uni with a finance legal background, I joined banks and then realised that within banks, the bit I enjoyed was actually insurance, and it's been very, very generous to me. It's afforded me the chance to travel all around the world and see different cultures and stay in different countries. So, I appreciate that as a traditional insurer, there's some perceptions out there, but that's not Tower. We're different, and what I like about Tower, what I like about what we're doing here is actually it is all around customers, it's all around communities, it's all around technology and data, and those are things I really, really enjoy.
Mm-hmm. Okay. So during the past 3 years, we've had, and it feels like in the past few days, we've had a lot of weather events, but before that, we've had the pandemic. These feel like unpredictable times for insurance. Can you talk to us a little bit about that? What has it been like over the past 3 years? Did you have to do any insurance of COVID-related things? Talk to us about that.
Yeah, maybe if I just take 2 steps back, Dan, and just sort of recap a little bit about the insurance market as it is in New Zealand. As a country, 9 out of 10 homes are insured. 9 out of 10 cars are privately insured. As a country, we expect weather events. We know we have earthquakes. And as a result, we all know the importance of insurance. And that's a really positive thing. Actually, relative to other countries, even within the OECD, New Zealand has the highest level of insurance penetration of any country. So we value insurance. I think what's changed, though, is we also recognise here at Tower that 2/3 of everyone who has insurance doesn't really understand it. And they find it full of jargon, they find it confusing. So even though they know they need it, they don't always really value it because they don't fully understand it. And in Tower, we're on a bit of a mission to help people really understand their insurance, to make sure they have the right insurance for their home, for their families, for their motor car or bike. And that's a different way of seeing insurance to people possibly have experienced in the past.
And when you are experiencing a weather event like we currently are, what happens inside insurance company? What meetings have you been having? What happens in the build-up and during one of these sort of crises?
Yeah, well, look, it's been a pretty busy 3 weeks. Let me start there. Whilst we don't go looking for large events like we had over the Auckland anniversary weekend or Cyclone Gabriel, which is upon us right now, we do plan for this. This is what we're good at. We can adapt very, very quickly. We practice this on a regular basis, both here in New Zealand and also right across the Pacific. So this is what we do. We're good at it. It's challenging when you have an event like we did in Auckland 3 weeks ago, and then we have another one like we do right now across the Upper North Island. But then again, this is what we train for, we practice for, the way we set up, and we're here to help impacted customers and communities. So for many of the teams, they've been on the go now for a number of weeks. I'm enormously proud of how they have responded, how we are responding to customers. A key part right now is to keep the communication very, very open. Because we've invested heavily in technology, we've been able to keep customers informed as they go through these events, which can be really traumatic if you are one of the impacted homes. But more generally, communities are very aware of it.
How is it that insurers can afford to pay out all those claims? How does that actual mechanism work? And how many can you take before there's just no money left? Can you explain that for listeners? How does it work? Where does all that money come from?
So again, this is where we get into the dark arts of insurance. And I think the key point here is, again, this is why you have insurance. We are set up to enable us to weather these storms or weather these events. So I think it's really important if you're sitting here as an investor, and looking at Tower, this is what we do. This is why we're here. So in some ways, I know people look across and go, gosh, all the insurers must be doing it hard. But actually, good insurance companies like Tower, this is what we do. This is what we plan for. We set up the capital and the risk frameworks all to do this. So I just sort of highlight that up front. What we do have is you have something called reinsurance. It's insurance for insurers. So whilst we support 320,000 customers in New Zealand and in the Pacific, we also have insurance that helps protect Tower as a business, and that's what reinsurance is all about. In our case, we have coverage up to and over $900 million worth of cover for a catastrophe event. So we're particularly well covered, we're financially strong, and we can weather earthquakes and large flood events like we've seen more recently. And that is something that, again, we've put in place. We've worked with those reinsurance partners for many years. Tower is 154 years young. So we've had our fair share of earthquakes and storms, and we're still here. And that reflects how robust those partnerships with reinsurers are, how much cover we do carry, and the fact that this is why you have insurance.
That's interesting, Blair. So even insurance companies have insurance.
Yep. Reinsurance. It's a dark hours, but it's a good one and it's pretty robust.
Do the reinsurance companies have insurance?
Oh gosh, I guess that what they do is they have panels, and that's how they get around it. So you don't just have one reinsurer, you have many reinsurers. And again, that's part of a comprehensive program that we put in place and have had in place for many, many years and decades.
You mentioned that, insurance companies are set up to weather storms and this is what they expect. But it also seems like storms, weather events, natural disasters, things that require insurance are becoming more frequent. And it also feels like insurance premiums are rising. Can you talk a little bit about that? Are insurance premiums rising? Why is it? Is it because the world is becoming less safe?
Look, at a macro level, so right around the world, yes, you're seeing the frequency and the severity of some of these storms increasing. I think also, we all know communications are much better, so you're more aware of what's going on at a global level as well as locally. So you do see things because of the world we live in with 24-hour-a-day news coming in. But nonetheless, we certainly are seeing some of these storms, the frequency and the severity of them increasing, and that is putting pressure on reinsurance. However, what I would say, and just bringing it back here to New Zealand, we don't price on one storm. We use enormous amounts of data, and what we do is we price things at a total level. In particular, we do risk-based pricing. So what we do is we look through to individual homes, we look through to individual motor vehicles, and we price at an individual level based on that risk profile at an individual level. And what that enables us to do is really match the pricing for the risks that apply to you as a customer. So if you're sitting here going, wow, all these storms around the world, yes, but actually we price at an individual level, and you can influence those premiums and your insurance. Key thing is understand how exposed you are to floods or earthquakes or coastal erosion. And, when you're looking at properties, understand those risks.
Right. So if you're looking at buying a house and it's on a floodplain, you're going to pay more in insurance than if it's on top of a hill, potentially.
That's exactly right. And this is the part of the challenge that Tower's really taken on that I said at the outset, was to really help people understand their insurance, understand the risk profiles of their home, and then to help you mitigate those risks. So these are the areas that have low propensity for flooding, or if you have high propensity for flooding, how can you mitigate some of that through better drainage and so on? I think what, to some regard, insurance companies, but councils haven't necessarily done so well in the past is help people understand the risks to their home. And, no one, I've been in this industry a long time, and I struggle to read through a LIM report that's a lot of technical jargon. What we're trying to do as Tower is help people really understand those LIM reports, understand the insurance they need to best protect their home and the like.
So you price on an individual level, but you must be thinking at a macro level about what climate change will mean for each individual property. Do you do modeling around that? Where do you get your information from, and sort of what is it telling you? How bad are things going to get, if you like?
We do. We rely and invest enormously in technology and data, and we also partner with some of the world's leading companies around risk modeling. So, for example, we partner with RMS, who are a global leader in risk modelling for the likes of flood in over 100 countries around the world. And here in New Zealand, we partner with them to help out, risk-based models. And so, for example, with flood, we've taken the last 50 years of data and modelled that. We've done over 350,000 different flood simulations to get down to that individual household level, which, most importantly, we then share with customers so that when they get a quote from us or they have their policy with Tower, they will be able to see for their home whether they are low, medium, high, or very high for earthquakes and for flood. And later this year, we'll also introduce it for coastal erosion, wind, and slips. And so that people start to understand the risk profile of their home. And then they can either feel comfortable about that, or they can start to think about what can I do to reduce some of that risk.
Yeah, my parents, when I was born, they bought a house on the harbour in Auckland, the Manukau Harbour, and it's a house that the backyard runs down to a cliff, a sandstone cliff, and the sea's at the bottom. And I remember when they bought it, and when we were young, they always said, "Why have they built the house so far back from the cliff? They should have built it on the edge so we can look out over the water." But over the past sort of 25 years, that cliff has come slowly closer and closer to the house, and they've started to realize, I'm glad they built it so far back. It's interesting how these things over time you might need to think. So if you think about something like a house that is built on the coast, and you're talking about sea level rises, is that something that's going to become harder and harder to insure, and it's going to become more and more expensive, or is it not quite that simple?
Well, I think the key thing for us is we're sharing this information with councils, we're sharing it with the government. As industry, insurance companies, we're sharing more information. What we see as the opportunity here is to share and educate people about where those risk perils are, what areas are prone to flooding or coastal erosion, and then we can take actions. Clearly, I'd sit here and say, don't build in low-lying, flood-prone areas. And Mother Nature's defense for floods and coastal erosion is the wetlands. And in the case of New Zealand, we've taken back 90% of our wetlands, and we've built on those areas. So there's a lot of property in flood-prone areas. And so we're working with councils and the like and saying, let's stop doing that, please. We've got lots of lovely land in Aotearoa. Let's build on some of the higher lands that aren't so prone to floods. Build away from earthquake zones that we know about. Lots of lovely land. Let's build in those areas and put the infrastructure in place. If you are on one of those areas that are higher prime, well, let's work with you and the councils and the insurance industry and the government and see about how we can start mitigating that and how we can start, preparing for more of these storms should that be the case. And I think also as you're sitting here and maybe you listen to this podcast, again, I'd come back to, gosh, Tower have a lot of risk, a lot of things going on. This is what insurance is for. This is why 9 out of 10 homes have insurance. So this is a good industry in terms of lots of people have insurance, need insurance, know they need insurance. The key thing is an insurance company is to adapt and to evolve. And if COVID and these storms have taught us nothing, successful companies need to adapt and need to invest in technology, invest in data, invest in efficiencies. And that's what we're doing at Tower.
Can I ask about a pet and possibly irrational fear of mine, living in Auckland, which is sort of famously a city encircled in volcanoes? Now, people tell me they're all dormant or mostly dormant, but how dormant is dormant? What I'm asking is, what's the volcano risk that you plug into your model in Auckland City?
Well, this is a good point. I was out with my family climbing up Rangitoto only 3.5 weeks ago before these storms arrived, and you have to remind yourself, this is only 600 years old. And in the lifetime of, volcanology, that is not very old. And we do have, 52, 53 volcanoes around Auckland. So yes, I completely appreciate your point. And Christchurch was a really timely reminder of the impact. Look, I'm not a volcanologist, but we use a lot of that data and we do put it into our models. And for every single home in New Zealand, we do give a risk profile for earthquake. So we can, in your case, Dan, if you're a Tower customer or your prospective Tower customer, hop on. You'll see your risk profile for earthquake as well as for flood, and you'll be able to understand how that looks. As a generic comment, we have low to medium earthquake risks here in Auckland relative to the likes of Wellington or some of the East Coast areas that we all know well. But that's not to say that, there's still not risks. New Zealand as a whole still has higher risks. As a country, we're the second riskiest country in the world for natural perils, which includes earthquakes and floods.
What's number one?
Number one is actually Bangladesh, and it's because of their flooding predominantly. They're a very low-lying country, and they have a lot of floods, unfortunately, for them.
So that I didn't realize that. So we're the second most risky country in the world.
According to Lloyd's, which is the research that they did a couple of years ago, yes, New Zealand is right up there, which is also talks to why we have such a high penetration of insurance. And we know we have earthquakes. We see them often. We prepare for them in terms of how we build. We had a really good lesson from Christchurch. We've adapted and evolved things significantly since then as an industry and as a country. And similarly now with floods, we are adapting. We need to keep adapting. We need to manage stormwater better. We need to get better and deeper understanding of how floods occur and how to cope with them.
You talk about needing to manage stormwater better, and I'm so tempted to ask you about the Three Waters proposal. Is that something you have thoughts on or comments on as an insurer, or is it too politically sensitive?
Well, look, what I would say, what we are doing as Tower, when we do our flood models and we do our risk models, we shared it openly with all councils. In fact, we went out to over 200 councils in November in 2021 when we introduced our flood risk-based model, and we shared it with all of the councils and with government. So what I would say to that is, as a very engaged business, we're really open to sharing that information. We're committed to working with councils, government, and other insurers to better prepare for floods and the like. And part of that is we need to invest in our infrastructure. If we're seeing storms where we see a lot of rain falling in a very short period of time, you need the infrastructure. So certainly we're a supporter of continuation of investment in infrastructure. As for the wider piece, I'll stay out of that and focus on what we do well.
Yeah, but one way or another, we need more investment in our stormwater systems, almost across New Zealand.
It's a big part of New Zealand. If you look back through our history, I'm a history buff, I love history, but cities were built around rivers, around coastal areas where you could park the boats. that made sense from a point of drinking water and from a point of access. It's not necessarily the case today. But as those rivers and river flooding and coastal flooding change and sea levels change, we need to think about where we set up our planning and where we build homes and where we build cities and towns and how we cope with their high precipitation levels and higher sea levels, higher coastal swells. So I think that we are where we are because of our past, but when we look forward, we need to think differently about where we build and how we manage those wetlands and how we support our communities.
Interesting. Okay. Well, one thing you mentioned earlier is that you have some insurance in the Pacific and have some staff in the Pacific, and you seem to be expanding into the Pacific. That seems like an interesting business opportunity, but perhaps not the first place people think of expansion. Can you talk about the opportunity for Tower in the Pacific and why you're choosing there as a target market?
Sure, Dad. Look, we've been in the Pacific for over 125 years, so we're committed to the Pacific. And when we look at Pacific communities, they're as much as part of New Zealand, Aotearoa, and particularly Auckland. So they're part of our values at the heart of Tower as a business. When I look across to the Pacific, we see an opportunity as a market. There's 2 million people, put aside Papua New Guinea, there's 2 million people in the Pacific, which is an attractive market. And we think we can reach them and support them with insurance. And they have low levels of penetration of insurance. So we see a lot of opportunity to increase insurance, particularly in places like Fiji, with 1 million odd population. Secondly, though, and really importantly, is we see it as an opportunity to actually deliver operational excellence. Why do I say that? We have the same core platform that we have that's on the cloud. We can manage claims from Suva just as well as we can manage them here in Auckland or Rotorua or New Plymouth or Christchurch. So we can manage claims, support our customers, and actually support our insurance experience. And at the moment, in Suva, with our brand, we can attract really talented people. And that enables us to cope with insurance highs and lows and flows. And over the last 2 to 3 weeks, it's become very, very clear that our ability to manage those events is really supported through our technology and through our people, which include our people in Suva. And that gives us a competitive edge. And again, as investors sitting here listening to your wonderful podcast, you're looking at Tower and go, well, we know people want insurance. They're an insurance provider. They're future-proofing themselves through their investments in technology and data and people and a unique footprint where we can tap resourcing and have been tapping resourcing in the likes of Suva and the Pacific, as well as New Zealand. And just to final point on that, a quarter of all of our staff across Tower, which is close to about 900, a quarter of all of our people work permanently from home. So we've adapted to flexible working very, very quickly. We also have around 150 people now in Suva who are predominantly working on our operating side, our claims and our customer service, in addition to our key Auckland contact centre and Rotorua. And that enables us, that flexibility and our ability to expand and cope with increasing call volumes and inquiries is invaluable in the industry that we're in.
Mm-hmm. Yeah. And you talked about there being lower penetration of insurance in the Pacific. I suppose in New Zealand, where there's pretty high penetration, you're sort of battling other people for market share, other providers for market share, whereas it sounds like there's some untapped market in Pacific for you to grow into. Is that the case?
It is the case, absolutely, Dan. So we're very healthy market share. What we're trying to do in the Pacific, though, as well, is, yes, with people have newer homes in metropolitan areas of the Pacific, we have really good penetration. But what we're also very conscious of is there are a lot of villages who don't have insurance and are impacted on an annual basis around things like cyclones. So more recently, in conjunction with the United Nations and some of our reinsurers, we've introduced something called Parametric cover, and we're piloting this in Fiji at the moment. And what it is giving a low basic level of insurance cover for villages where they come together and share to get insurance cover. So predominantly they wouldn't be able to get this because they may not have cyclone certification on their homes, or they may not just be able to get into a city to buy insurance. Now, because they can access us with their phone, and we've got the brand. We're actually able to give them this new generation of insurance cover, parametric cover, to help them cover for things like cyclone. It's really exciting. And I think, part of what we're looking to do here is help communities, actually get through some of these weather events and cyclones and storms and actually move forward and better plan and prepare for it. But if you don't have insurance, you're constantly in the cycle of going backwards because you never recover from one of those events. And what we're doing through parametric cover and United Nations, etc., is actually helping villages and lower decile communities get through it and be better off and be able to bounce back from some of these events.
Yeah, that's good work. A couple of other questions. One is fake insurance claims. How common are they? How do you spot them? And have they becoming more or less common?
We, again, where do we go to? We go back to our technology and our data, and we partner with a company called Frisk, amongst other companies, which have leading technology, use a lot of AI to uncover patterns of fraud and detect it and get it early, and then we follow it up. And so unfortunately, in the world we live in, we also do see people try it on, or we do see businesses that do look to have fraud come through, and we can detect it early, again, through using smart technology, smart processes, and being acutely aware of it. Even more recently with the large Auckland anniversary event, we saw people try to change their sum insured, during the event, or after the event in some cases. We also saw people sort of rock up to properties, which I think is really absolutely shameful, and say they're from an insurance company, and then they scope out your property, and actually, in some cases, they were looking to try and take some of your assets out of the house. So we detected that. We're on top of that. Again, we plan for that. It's not something you look forward to fraud, but we do plan for it because no one wants that, fraudulent claims to be paid.
You already touched on my next question, which was AI. Obviously, artificial intelligence having a big moment right now. Everyone's trying out ChatGPT, doing all sorts of things. What sort of role does AI play in insurance, and where could that go in the future?
Yeah, well, interesting enough, as an industry, or certainly in the case of TEL, we've been using AI for a long time. I just mentioned a couple of examples of it. We use a lot of algorithms, a lot of data. We're moving about 5,000 data points at any time on an individual home. So we use a lot of data, and we use that type of data as for assessing motor and drivers, as well as obviously around home. So we've been doing that for a long time, and we'll continue to invest in it, detecting fraud, so on. So it's a big part of what we are and how we work. But similarly, we do see the opportunity around AI to help service customers and to be able to build it through IVRs or contact centers or online chats or chatbots. And we do see it as a way for customers to ask questions, and we'll tap into that to quickly get a response. We know in terms of, as an industry, roughly 1/3 of all calls into a contact center are questions like, am I covered for? So we can answer those, and we do that today through our Charlie the chatbot. Often spends quite a bit of time online saying, yes, you are covered, or yes, you are covered for this, but, not for this, to help people understand their cover, because it comes back to this wicked customer problem we talked about right at the beginning. 2/3 of customers don't understand their insurance. They know they need insurance, but they don't understand it, and therefore they don't always get the right insurance for them. And that's the wicked customer problem we're solving for. And AI has a wonderful role to play in that.
Yeah. Okay. Super interesting. Hey, we're running up towards our time limit. If you were asked to give retail investors or the New Zealand public in general one key takeaway from our chat today, what would that key takeaway be? And you can take a minute to think about it if you need.
Well, look, I think the first one is we do live in the shaky isles, and increasingly some of the wet isles, if you've been in the north, lovely in the south. But we know we get storms. We know we need insurance for our home, for our car, for our lovely boat or e-bike. We need insurance, and that, family insurance with a pet too. The key is too many people don't understand it, and we've got to break that cycle of not understanding your insurance, and that's what Tower's all about, making it simple, transparent, really competitively priced, and we do that through technology, and we do it through wonderful people, and we do it through data, and we do it both in Aotearoa and also Pacific. We're the last listed insurer. I think and that's us as Tower, and we're very proud of our 154-year history. What we are doing, though, is we're a new generation of insurance, and that's affording investors growth. We've grown double-digit growth now, certainly since I've arrived here. We've achieved a track record of growth, but also really attractive yields. So we're offering, around 8.5%, 9% at the moment in terms of the dividend yield, and that's because we've set the business up now to do sustainable growth, sustainable earnings, and we are then sharing that and passing it back through to investors. So I know as you with Sharesies, Dan, and you have a very successful platform that has totally changed how people look to do investments. Similarly, we're doing the same as an insurance company and as a stock to invest in. That's what Tower is representing. It's a new age of insurance, I think a very, very good one. And I think right now, as we sit here in Cyclone Gabriel, insurance has never been so important. But equally, insurance, you understand, has got to be so what helps a successful business thrive in the future.
It sounds like you'd like people to think about Tower as being a tech company as much as an insurance company.
Yeah, look, at the end of the day, we're an insurance company. I'm very proud of that. But absolutely, we invest heavily in tech, heavily in people, and that is the heart of our success.
Yeah. Okay, brilliant. Well, thank you so much for joining us. We appreciate your time and insights, and perhaps we'll get you on again next time we have another cyclone.
Even before another cyclone. Anytime. Thanks, Dan.
Thanks, everyone, for listening, and a big thanks to Blair for joining us. If you're not following the podcast, you can do so on Apple or Spotify or wherever you get your podcasts. Leave us a rating and a comment and tell us who or what you'd like to hear about next. We have a special offer for Sharesies investors. If you use the promo code SharedLunch2023, you'll get $100 off an annual subscription to BusinessDesk, which is usually $249. The offer only applies to new BusinessDesk subscribers, can only be used once per subscriber, and can't be used with any other discounts. Enjoy the rest of your week and stay safe.